Welcome to the Economic Archer podcast. I want to remind you to like the video and subscribe if you enjoy the content. Please forward this to your friends and family. This information that I'm going to share today is going to be the most important information that I've shared with you yet, and it is important for every one of you. In fact, I'm going to go so far as to say, if you ignore this, it will be at your financial peril. It will be at your financial peril. Because this dollar that I've been talking about, which has value only as long as you believe our government's going to pay its debts. That same dollar that has lost 97% of its purchasing power since it was formed in 1913. That dollar is in a really, really bad spot. And I'm going to share some things with you today about how we got here and what you better do now to protect your buying power, or it's going to be too late. So how did we get here? In 1913, central bankers like J.P. Morgan and others, they convinced our government to go to the Federal Reserve System, central banking system, in order to do three things: to keep prices stable, to maintain full employment in our country, and to promote stability in the financial system. I want to address all three of those, but before I do, I want to remind you of what I said in the first video. Just listen to this. This is coming straight from an article that I'm going to highlight in my notes that you can view online. Although the Fed is the central bank of the United States, it is not really a true government institution. Remember me telling you that? The Fed is not funded by tax dollars, and its decisions do not have to be approved by the President or either House of Congress. They're making decisions on our money and what our interest rates are, and they stand alone. They're not even connected to our government. That our government doesn't approve anything that they do. The governing body within the Fed is the Board of Governors. This is a 7-member committee whose members are chosen by the President and confirmed by the Senate. To ensure fair representation, there may not be more than one governor for each of the 12 Federal Reserve districts across the nation. Members of the Federal Reserve Board of Governors have terms that last 14 years. The Federal Reserve is subject to congressional oversight and any changes in the law that Congress passes. But go back to that first statement. Their actions do not have to be approved by the President or either House of Congress. Remember me telling you that early on? So, they were brought into being because they were going to bring stability to our pricing, full employment, and they were going to bring stability to our financial system. So first, let's look at prices. If you look at the first video, I told you it now costs 29 times more to buy the same amount of goods that you could buy in 1913 when the Federal Reserve System was brought in. So they have failed miserably on their first responsibility, which is to keep prices stable. Number 2, maintain full employment. We've had 20 recessions since 1913. A recession is defined by 2 quarters in a row where our gross domestic product, the goods and services that we produce, has declined. We've had 20 of those. Now, what goes hand in hand with recessions is employment issues, where we don't have as many jobs. And it makes sense. If we're not producing as much goods and services, then we're not going to be able to employ as many people. Right now, you're looking at unemployment numbers that look really low, but it's all smoke and mirrors. Because what they don't include is what percentage of the working age population is working. It's way down. I'll let you do that research on your own, but historically, we're at record low levels of people that are working age working in our economy. Last is promote stability of our financial system. In 2008, President George W. Bush and Hank Paulson, who was then the head of the Treasury, they came out, they got on the mic, and they told us we're on the brink of our entire financial system collapsing. That doesn't sound like stability to me. And they came to us for $787 billion. Taxpayer dollars, hard-earned money that we earn, to bail out these too big to fail banks. Now, when they're getting record profits, they don't come to us with their profits, but when they get in trouble financially, they're going to come to us. We're going to bail them out. You remember that? That was only 2008. So now here we are, 14 years later. We're on the brink of the financial system going totally under. We are already at the point where these dollars are buying next to nothing. What can you get for $1 these days? Go ask somebody that's 75 or 80 years old what they could buy with $1 when they were a kid. Dollars will hardly buy anything anymore. But I'm going to tell you, I told you the very first podcast, part of the reason I felt compelled to start a podcast is I'm going to bring the truth that wealthy people use to maintain and grow their buying power to the middle class and the lower income people. So, at the same time, these central bankers are telling us that things like silver and gold are relics. They're not of any consequence anymore. You'd be crazy to invest your money in those. And I've already shown you, if you look at the dollar, it's lost tremendous buying power, but not gold. Gold's actually gone up in buying power. Remember that example I gave in the very first podcast? You can buy 3.2 times more goods with the same amount of gold as you could in 1913. Contrast that to what's happened with the dollar, where you can buy 97% less. Okay? So they're telling us, don't buy gold and silver. What are they doing? Folks, you're going to be stunned when I tell you. Central banks are purchasing gold at record highs. This article's from August the 22nd, 2019. Central banks added nearly 84 tons of gold to reserves in Q1. But you may say, well, that was back in 2019. What's going on more recently? Here's another one. Central banks added 374 tons of gold. This article's from May 2022. So currently, they're buying tons of it. Let's look at this last article. It says that, and this article is from 5 days ago. 5 days ago, okay? Here it is. Nicholas Anthony, as reported by Diane Rabione at Axios, says an unprecedented shift toward gold has been led by the financial authorities of the world in what appears to be a move away from what? The dollar. The same people that are telling us, do not buy gold and silver. What are they buying? They're buying gold and silver. You better be buying it too. You will lose your buying power, because when this whole thing, what did I say my dad told me in 1971? When we stopped backing our dollars with gold and silver, he said the buying power is going to go way down, but what's the eventual end? The eventual end is that when people decide this dollar, which is backed only by faith in our government to pay its debts, and we're $100 trillion in debts when you consider unfunded liabilities, when they decide we're not somebody they can count on to pay their debts, this is worthless. Worthless. Silver and gold have never been worthless. Think about what I'm telling you. They're telling you gold and silver is relics. Do not buy that. It's ridiculous. Financial advisors, which by the way, most of them have only been in the market for the last 20 years, they've never seen a major downturn in the economy. They've certainly never seen a depression. They're like, gold's a relic. You don't buy gold and silver. The same people that are telling us don't buy it, they're buying it in record numbers because they know what's coming. When they're talking about Great Reset, digital currency, they're going to change the dollar to a digital currency and all those things. They're telling you, if you translate that, they're telling you they see the dollar is going to collapse. Now, I don't know if it's going to happen next week, but it's about to happen. And I think we're way closer. I would be stunned, and I'm going to go on record as saying this. I know a lot of people that are very nervous about giving dates. I'm not going to give you an exact date, but I will tell you this. You save this video, and when we get to Thanksgiving of this year, you're either going to be giving thanks that you listened to me and you got most of your money into things like gold and silver. I'm not a financial advisor. I'm just telling you what I do. But I'm telling you, if you look at this come Thanksgiving and you haven't done what I've said, you are going to say, I should have listened. And folks, don't just listen to me. The facts that I'm bringing up to you, go online and research for yourself. Your family's buying power depends on it. And I would even go so far as to say, since we the people run this country and we the people better be informed, otherwise we put people in there that say one thing and do another. We've all seen the people telling us, you do this, and they do just the opposite. Rules for thee and for you and not for thee. Watch what they do, not what they say. They're buying this. They're getting out of this. You better do the same thing. Thanks for listening. Please forward this to your friends and family and those you care about. Thank you.